Hi, my name is Putri Najiha binti Amri. My matrix numbers is 309721. Today, I'll be presenting the background of Petronas Dagangan Berhad. Petronas Dagangan Berhad was established on 1982 as a subsidiary of Petronas. The company is mainly involved in the retails and marketing of downstream oil gas product in Malaysia. The company operates through three main segments, which are retails, commercials, and others. It offers a wide range of petroleum products including motor gasolines, diesels, aviation fuels, liquefied petroleum gas or LPG, kerosenes, and also asphalt. In addition, Petronas Dagangan Berhad provides various lubricant products for passenger cars, motorcycles, commercial vehicles, as well as industrial and marine application. The company also offers automotive functional fluids, gear oils, transmission fluids, and other specialty. Besides selling petroleum products, Petronas Dagangan provides additional services such as technicals and business services. At Petronas Station, customers can also enjoy convenience facilities such as quick service restaurant, Mistral convenience stores, banking services, car wash facilities, and courier services. Today, the company operates approximately 1,000 Petronas stations and 760 Mistral convenience stores across Malaysia, making it one of the leading petroleum marketing companies in the country. In conclusion, Petronas Dagangan Berhad plays an important role in supplying energy products and providing convenience services that support the daily needs of Malaysians. That is all for me. Thank you for your attention.
Hi, my name is Aisha binti Norli and my matrix number is 312917. Today I will be presenting about the liquidity ratio for Petronas Dagangan Berhad that contains current ratio, quick ratio, and cash ratio. The current ratio measures a company's ability to pay its current liabilities using its current asset. In 2020, the company recorded its highest current ratio of 1.742, indicating a strong liquidity position. However, the ratio gradually declined to 1.479 in 2021, 1.356 in 2022, and 1.343 in 2023, showing a reduction in liquidity. In 2024, it improved slightly to 1.380. Despite the fluctuation, the ratio remained above 1 throughout the 5 years period, indicating that the company was able to meet its short-term obligation. Let's move on to the next part, which is the quick ratio. The quick ratio measures a company's ability to pay its current liabilities using its most liquid assets, excluding inventory. Petronas Dagangan Berhad recorded its highest quick ratio of 1.575 in 2020, indicating strong liquidity. The ratio then declined gradually to 1.437 in 2021, 1.329 in 2022, and 1.316 in 2023, reflecting a reduction in liquid assets. However, it improved slightly to 1.346 in 2024. Overall, the quick ratio remained above 1 throughout the 5-year period, showing that the company maintained a stable ability to meet its short-term obligation without relying on inventory. Next is cash ratio. The cash ratio measures a company's ability to pay current liabilities using only cash and cash equivalents. The company recorded its highest cash ratio of 1.098 in 2020, indicating a strong cash position. However, the ratio dropped significantly to 0.508 in 2021. Then, it improved slightly to 0.555 in 2022. And it reached its lowest point of 0.277 in 2023. In 2024, it recovered modestly to 0.54. Overall, the cash ratio remained below 1 from 2021 onwards, suggesting that the company relied on receivables and other current assets rather than cash alone to meet its short-term obligation.
Okay, next we will talk about the asset management analysis. First, I will explain about the Petronas collection period from 2020 to 2024. The collection period increased from 22 days in 2020 to 56 days in 2021, improved to 40 days in 2022, and rise again into 54 days in 2023, and stabilized at 55 days in 2024. Despite some fluctuations, Petronas maintained a collection period of around 55 days to 50 days, which is reasonable for a multinational company serving industrial and government-related customers. Overall, the stable collection period supports consistent cash flow and efficient receivable management. Next, we will examine Petronas account receivable turnover ratio from 2020 to 2024. This ratio measures how efficiently the company collects payments from its customer. A higher turnover ratio indicates faster collection of receivable. In 2020, Petronas recorded a strong turnover ratio of 60 times. However, the ratio declined significantly to 6.448 times in 2021, indicating a temporary reduction in collection efficiency. These declines may be attributed to Petronas providing greater payment flexibility to its business-to-business and global clients during the early stage of economic recovery. Following 2021, the ratio showed a gradual improvement, reaching 7.967 times in 2024. This positive trend suggests that management has strengthened its credit control practices and successfully improved the collection of outstanding receivable. Overall, the recovery in receivable turnover reflects better credit discipline and support healthier cash flow management for the company. Okay, so next we will talk about a Petronas inventory turnover ratio from 2020 to 2024. The ratio increased significantly from 40.073 times in 2020 to a peak of 237.890 times in 2022, before declining slightly to 198.595 times in 2024. This sharp growth was mainly driven by the recovery in global oil demand and higher crude oil prices after the pandemic. The slightly decrease in 2023 and 2024 reflects the normalization of energy market conditions. Despite the decline, the ratio remained very high, indicating efficient inventory management, faster inventory movement, and a low risk of stock obsolescence. Next, we move to Petronas Total Asset Turnover Ratio, or TATO, from 2020 to 2024. The ratio increased steadily from 2.238 times in 2020 to 3.414 times in 2024, with significant growth occurring in 2022. This upward trend shows that Petronas became more efficient in using its assets to generate revenue. The improvement was supported by the post-pandemic economic recovery and stronger operational performance. Overall, the increasing TATO reflects better asset utilization and strong operational resilience. So, for Petronas Fixed Asset Turnover Ratio, or we call it as FATO, from 2022 and to 2024. The ratio increased consistently from 4.577 times in 2020 to 6.393 times in 2024, nearly doubling over the 5-year period. These growths indicate that Petronas became more efficient in utilizing its fixed assets, such as offshore platforms and refineries, to generate revenue. Overall, the increasing FATO reflects strong operational efficiency and effective management of its capital-intensive infrastructure.
My name is Kamila Aisha binti Nur Azman. My matrix number 309580. Today, I will be reviewing the leverage ratio for Petronas Dagangan Berhad over a 4-year period from 2020 to 2024. I will be analyzing three which are key metrics: the debt ratio, the debt equity ratio, and the time interest earn ratio. Let's begin with the debt ratio. As illustrated in the data, the company's debt ratio climbed steadily from 0.3 in 2020 to a peak of 0.49 during 2022 and 2023. It then showed a positive improvement, decreasing to 0.45 in 2024. This improvement in 2024 was supported by a decrease in total debt from Rm 5.08 billion to Rm 5.04 billion. The most important takeaway here is that debt ratio has consistently remained below 0.50. This indicates that Petronas Dagangan Berhad maintains a very conservative balance sheet because the majority of their assets are financed by the equity rather than debt. The company carries significantly lower risk of solvency. To the debt equity ratio, we can observe a significant rise at the beginning of the cycle, moving from 0.47 in 2020 to 0.95 in 2022 and reaching 0.97 in 2023. This increase was primarily driven by a substantial jump in total liabilities from Rm 2.68 billion to Rm 5.65 billion, which likely reflects on increase in trade payables or working capital. However, the ratio cooled off to 0.83 in 2024. This 2024 improvement was the result of successfully deleveraging, bringing debt down to Rm 5.0 billion, while total equity rose to a fourth-year peak of Rm 6.06 billion. Crucially, this ratio stays continually below 1.8, reinforcing that the company remains unleveraged and heavily financed by its shareholders. Let's examine the time interest earned or TIE ratio. This metric saw a massive surge from 5.65 in 2020 to a peak of 16.51 in 2022. This peak was the result of operating profits rising to Rm 1.14 billion, while interest expenses stays at a historical low Rm 96.6 million. Following this, the ratio dropped by almost half, falling to 9.27 in 2023 before stabilizing at 9.62 in 2024. It is important to note that this drop was not due to poor performance. In fact, EBIT, which is earning before interest tax, grew to a new highs of Rm 1.35 billion in 2023 and Rm 1.5 billion in 2024. The decrease in the ratio occurred entirely because recorded interest costs increased significantly to Rm 145.7 million and Rm 160.8 million during those respective years. Even with these higher interest costs, a TIE ratio of 9.62 for 2024 leaves still company a very high operating margin to comfortably service its interest payment. That is all for me. Thank you.
Hey guys, today let's do a quick breakdown of our company's financial performance over the last 5 years. We have had some challenges, but overall, the number looks pretty good. So let's dive in. First up, gross profit margin. This one was a bit of a roller coaster. In 2020, we started at 12.1%. But then it dropped for 2 years straight down to 9.7% because sales costs were quite high. But fortunately, we bounced back in 2023 to 10.7% and keep climbing to 11.8% in 2024. Long story short, we struggled with sales costs early on, but we managed to fix and control it well in the end. Next is the operating profit margin. This performance looks much better, mostly going up. Starting from 2.2% in 2020, it went up to 3.3%. We had a tiny dip in 2022 at 3.1%, but we quickly recovered in 2023 and hit our highest peak at 4.1% in 2024. This proves our management got way more efficient at controlling daily operating costs. Third, net profit margin. Similar vibe here, some ups and downs, but generally improving. It started at 1.5% in 2020, rose to 2.4%, dropped slightly, but that bounced back to the end at its highest 2.9% in 2024. This is a great sign because it proves our final net profit is still growing in the long run, even after paying off all expenses and taxes. Now for return on assets. This one is a clear winner, straight up. The data started at 3.3% in 2020 and then it consistently grew every single year. 5.5%, 7%, 8.4%, all the way to a solid 10% in 2024. This means the company is getting much smarter at using its asset to generate more profit. Last but not least, return on equity. The growth here is absolutely insane. In 2020, it was just 4.8%, but it leaped to 9.5%, then 13.6%, 16.6%, and peaked at a massive 18.4% in 2024. This proves The company is highly successful at turning the money invested by shareholders into solid profit. So, over these 5 years, the company is definitely on the right track and getting stronger. This offer
My
today.
name is Nohuslina binti Norisam and my matrix number is 309719. I will present the conclusions and recommendation from our financial ratio analysis of Petronas Dagangan Berhad for the period of 2020 to 2024. Overall, the company demonstrated strong and consistent financial performance throughout the 5 years. In terms of liquidity, Petronas Dagangan maintained both of its current ratio and quick ratio above 1, indicating that it was able to meet its short-term obligations. However, the declining cash ratio suggests a greater reliance on receivable and operating cash flows. For asset management, the company showed improved efficiency as reflected by the increase in total asset turnover and fixed asset turnover. This means that its assets were utilized effectively to generate revenue. So regarding leverage, the company adopted a conservative financing approach. The debt to asset ratio and debt to equity ratio remain low, indicating low financial risk and limited dependence on external financing. In terms of profitability, operating margin, net profit margin, return on asset, and return on equity all improved over the period. This shows the company's strong ability to generate profit and create value for shareholders. Overall, Petronas Dagangan Berhad is financially healthy with strong profitability, efficient asset management, and manageable risk. Therefore, it can be considered an attractive investment option. The company should strengthen cash management, improve receivable collections, and continue optimizing asset utilization. In addition, management should closely monitor liquidity trends to prevent further decline in liquidity ratios. Finally, while the company remains an attractive investment, it should continue maintaining a healthy liquidity position and be prepared for external challenges, such as fluctuations in oil prices. That's all from me. Thank you.